Stocks, they fell hard again today. Economic fears and many unknowns rattling investors. The Dow falling another 1,300 points. It now closed below 20,000. The Dow is now down a mind-blowing 10,000 points from its all-time highs hit just last month. Let's put that in context. It took the Dow 103 years to first hit the 10,000 mark, and now we have lost 10,000 in fewer than 30 days. Trading was halted again today after we fell 7% in the afternoon, but the pause did not refresh. Selling continued, and the average return of an S&P 500 stock today was a loss of nearly 8%. Oil also crushed, falling 24%. Oil now at an 18-year low. Shares of Chevron, they took it hard, falling 22% today. But there was one potential bright spot in all the sell-off, a name that you know, actually hitting a new all-time high in today's market. We're going to bring you that name ahead. But first, we've got to get more on that historic sell-off and the big breaking news for the NYSE. Bob Pisani, and Bob, we just heard Stacey Cunningham. We just heard that interview. Obviously, this is nearly unprecedented. I think back to 9/11. I'm sure there were a few other times during war. What's your take?
The stock market has closed many times over the years, Brian, and during World War I for several months, during 9/11, but that's the stock market closing. The NYSE floor is not closed before and continue trading electronically independent. So this is a first. I think it was the right decision. We did get a positive coronavirus test down here. So let's just talk about the markets and what's going on here. Another week open, but markets were down about 6%. Pershing Square, Bill Ackman did come on CNBC to declare a gradual shutdown was not working, and that America needs what he calls a 30-day spring break. The emotional moment came when he said, "I'm not going to kill my father. I went into lockdown almost a month ago to save my father's life." Lost in the interview was Mr. Ackman's insisted that he was a buyer of stocks, particularly of Hilton. That caused a lot of people a big surprise, but it was all lost. Bill Miller also came on our air saying that there were 4 great buying opportunities in his life. This was the 5th one here. So that moved the S&P, Ackman's comments, down to 7%. That halted trading, as you heard from Brian, hit the circuit breakers. Unfortunately, the halt was 23.51. That was the December 24th, 2018 low. And when we reopened, we broke through that. That was sort of the last technical indicator that was out there. We rallied big time into the close, though. 900 points on the Dow, likely on news that the Senate passed the House's coronavirus relief bill and will send it to President Trump. Boeing, a big focus, of course, here, down another 20%. They were seeking access to $60 billion in public and private liquidity. By the way, the market cap for Boeing, about $56, $57 billion right now. Guys, back to you.
All right, Bob. Hey, Bob, thinking about you guys. Will for everybody, be well. All right. Let's get more now reaction to this news. Joining us on the CNBC Newsline is Bob Greifeld. He is the former CEO of the Nasdaq market site. And Bob, the Nasdaq, by the way, is not what the NYSE is. I mean, this is more of an office building with the electronic platform here. Do you envision this building closing?
No, I do not. I would say with respect to the New York Stock Exchange closing, most of the activity, the vast preponderance of it is electronic, so I don't think there's much significance to this move.
Do you think that it's smart to wait until Monday?
Well, that's for them to know with great details. Obviously, we wish it was a little bit sooner, but certainly if you want to make sure all the BCP plans of all your customers are in place, I can understand the wait.
We look at this market here, and Charles Schwab reporting that, they're having difficulty getting people to work from home, not because they can't get them, because there's all kinds of issues. I've been talking about it for more than a week. Just technology, network security. Are you confident that the markets are working, not just buying and selling equities, but the markets are working at the derivatives, structured product, arbitrage, all those levels effectively enough right now, Bob?
Well, I think what you see is somewhat a replay of 2008, where the equity markets, the electronic markets, are truly performing very well. Nobody likes the level, and that 10,000-point drop, which you highlight, is truly breathtaking. But the fact is the plumbing, the infrastructures has worked. The clearinghouses, the exchanges, the broker-dealers have done a phenomenal job. When you move down the automation curve, where you have markets where are more bespoke and you have more face-to-face contact required, whether it be on the telephone or direct in front of each other, those have not done as well. And you can broadly characterize that as the credit markets always have difficulties of performing in these kind of times. And I would have to give credit to the Fed in a certain way, they're taking the playbook that was developed back in 2008, but they're compressing the time frame in terms of how they're implementing it. And for them to put in the commercial paper facility as soon as they did, I think is quite impressive, as somebody lived through 2008 and waited quite a long time for that to happen.
Any indication, Bob, I'm sure you're talking to people all day long, of where this incredible volume is coming from? You know, we know there's a lot of leverage out there. There's a lot of these sort of collateralized products, passive investing ETFs. Why have we seen such insane volatility and volume?
Well, I think the self-evident answer is probably the best answer, right? We're facing our first global pandemic in 100 years, and people do not have any real clue how to respond to it. And the same investor or class of investors could have a point of view one day and have an entirely different point of view 2 days later. So I think we're seeing that. So you can't pinpoint any particular class of investors. It's the marketplace, it's the world, it's the global economy. We have a global pandemic, and people have to process that, and we don't have the toolkit in our mental capacity right now to really kind of get our head around it.
Where do you see this whole thing going?
Well, I think when you look at what the Fed is doing and what the administration and Congress is trying to do, I think you have to applaud them. They're moving at rapid speed, but that's not directly addressing the problem, right? So we're going to be in this period of time until such time we get a therapeutic or a vaccine, right? That is the underlying problem. We have many, many symptoms out there, but we've got to hope that our scientists come forward, and certainly what Regeneron announced yesterday, and they have great credibility, certainly with their work with Ebola, we can be heartened by that. But you're not going to get past this until the science delivers us either very strong therapeutics or a vaccine.